Hello again. In the last video, I made a reference to the secondary objective and how important that is to the way the wealth tax scandal has been handled and the way the financial services industry is developing. And in that regard, I'm just going to touch very briefly on the reappointment of Nikhil. I'm not going to spend a lot of time on that because it's already been covered in this series of videos. But what I'll draw your attention to is the narrative that I pasted into the description, and that is the comments from Alder, the FCA's chairman, and he's somebody that's had one or two issues with whistleblowing himself in the past, but the language he uses is very, very much the secondary objective. And I'll draw your attention to the narrative around an organisation transformed. Now, you would have seen that many times through the response to the all-party parliamentary group report and other probing issues. And there's been very, very synchronized narrative between the FCA and HM Treasury, both on wealth tech and broader areas of criticism of the regulator. They've been pushing this transformed. And the relevance of that is the Achilles heel of that, if you like, is the wealth tech scandal and the broad range of catastrophic failings by the FCA. And that is in many respects the way it's been highly synchronized and managed in a way to keep it completely out of the public light, because if you've made the decision, and this spans the previous government and it's come into the current government, so really Reeves has just carried on Jeremy Hunt's policies and just added a bit more to it, that you're not going to reform the regulator because you're going to go for growth. You have to say it's been transformed. So that is the repeat narrative that's necessary to push this secondary objective. There's nothing wrong with the secondary objective of trying to use the financial services industry to raise growth and competitiveness, but it should be done in a sound and reformed way. And my argument is the model that we currently operate is very flawed, and hence why I've had this difference in the way I look at things to the way they're being presented, and I'll try to give you that insight into that. Now, if you can imagine, when I met the FCA, to sit my interview over the wealth tech scandal, by that time, they were very much alive to the fact that I was looking. I'd got a very keen interest, and along with some long-standing research associates, very keen interest in the breadth of the failures, the conflicts of the model, and how they were using narrative to push this notion that they acted very quickly and expediently, and that led to the events that I tried to outline in the previous video, of some veiled threats, and about essentially not discontinuing my investigations, and also some pressure to produce a witness statement. The witness statement I would have done had my concerns been allayed. And again, the previous video I've got into how those initial veiled threats, which the two people who made them at my compelled interview, I have to say, I don't think they were entirely comfortable with what they've been asked to do. It took a different trajectory when Anthony Williams stepped in. He tried to frustrate my efforts to communicate my concerns to the court, and then, as he's trained to do, try to push it down a narrative that I wasn't cooperating, which, that if you understand the way that people like him have been trained, you'd understand why he did that. That also manifested itself in the Duncan Alger response, and I covered that in the video. Disorderly response, he used the same tack. Now, FCA have clearly gone beyond just myself. They've issued some very stern threats to the media, and more latterly in a slightly different way to individuals and organisations as well. Now, staying with the secondary objective, another key tenet to that has been private assets, and I've referenced that through previous videos, and the investigation into the corruption behind some parts of private assets long predates the FCA's intervention in wealth tech, in placing it into special administration. And I do want to say, before I proceed, again, not all private assets is bad. The bit that you'll see promoted to you in the growth of this asset class is what they'll say, and there's some validity in this actually, that they want to unleash your savings and use it to invest in startup British companies, innovative British companies, and use basically public savings to help support that. So innovative British companies have got the chance to have gain capital at an earlier stage, and this will happen through pension funds and also other collective investments, and that will help raise the growth of the economy and mean that those businesses can prosper without being taken over and vultured by overseas, let's say, on an undiscriminated basis, Americans coming and sweeping up British tech before it's really got a chance to get started. Now, there is some validity in that, and it's a good idea if it's done in a transparent, meritocratic way. But behind that, there is a whole murky side to it. And as I alluded to in previous videos, that is reference to where you see, and it's centered around vulnerable adults, a lot of this. So from children right up to the elderly. So in areas such as health and social care, where you see money being sucked out of the public sector and into private equity. And you're seeing a big creep of private equity into these areas because they're very reliable cash flows. I'll give you an example now, and I'll try and explain to you how this works. And I'm going to take the rape gang inquiry that's been promoted by Rupert Lowe and his crowdfunding efforts, because what I'm going to do now is I'm going to give you a different view of what he's going to be looking at. I think if you look at what he's done and said, it's quite clear the way initially he's going to take his investigation, I think. But I'm going to give you another angle on how you would look at this from a private assets investigation point of view. So here goes. So bear with me, I'll try and simplify a model very quickly. Take a local authority. Now, a local authority, all local authorities are involved in overseeing health and social care of vulnerable adults. And let's take a group of people in this local authority who want to be a bit more entrepreneurial. So in essence, they will be very experienced in how the industry works and how the cash flows are formulated and so on. So they break off and they create an agency to receive work from the local authority in the area of social care, let's say, for instance. It could be health either. So they will then start receiving work from the local authority, and the agency will grow, and it will probably start in a localized or a regionalized format, so serving one or a small number of local authorities in a specific area. Then the agency perhaps merges with another agency or buys another agency, and it gets a bit bigger and starts to expand out. Then above that, you will have a bid company, private equity, who will look down and it will see that how this agency works. And you've got vulnerable people, and these vulnerable people are effectively a stream of cash flows. So and this agency would have worked on this basis. So the vulnerable people will be referred to it, and it will provide part of the services that are involved in administrating and allegedly looking after vulnerable people. And there'll be a stream of cash flows. And that will determine where they go with it, because they'll look at a person that can be a young child up to an elderly adult, and they'll say, right, there's X amount of years of cash flow in this person, and that will determine how they administer that person. That's very attractive to private equity, because you've got, effectively state-sponsored cash flows, and you can see because they're age determined, or you can put a mortality on it, so you've got very steady cash flows. So private equity swoops down and it buys these agencies or agency, and it then bolts them to other agencies similar that's bought elsewhere. Then you start to build up quite a big entity with very, very reliable, visible cash flows. Private equity will buy that with a combination of its own money and some debt. What it will then do, and this is the private equity model that many of you will be familiar with, it will then sell part of that company, these agencies that it's bought, to investors in a fund that it manages. So at that stage, you've got a private equity company that owns now part of the business that it's bought, and the remaining part it will sell to the investors of an offshore fund. And essentially that part of the company that it doesn't own, it will charge a management fee on managing it for its investors. So you can see how you can spread an initial purchase quite wide. Now the interesting thing is, if you then look at the investors of this fund, for instance, they will be endowments, religious organizations, charities, maybe some family offices. So they're institutional investors. Now, this is a very well-established model, and it's been going on for quite some time. And as I said in the previous video, it has its roots in the time of Tony Blair in particular, and it's really steadily grown and grown and grown. Now, there are very established plans in place to expand and accelerate this model. So, to use the current term that we're all familiar with, go further and faster with it. And to do that, they need to bring in new types of investor. And the new type of investor are you, me, via this push to private assets, which will come via our pension funds. As I said to you, the shop window bit will be your high-tech, high-end, innovative, growing British businesses. There will be some of that, but there'll be this merged in behind it. So this opens up a whole new line of cash that effectively, if people's pension funds, life policies, savings plans can effectively allocate some money to private assets. That's a new type of investor coming in. There is another thing that you need to consider, because you would say, right, well, okay, if these private equity companies are buying up these businesses, they can sort of develop them in some fashion or another, sort of do some financial engineering, and well, they could just sell them on to the public markets, and they could, so they wouldn't need money in the way that I described. No, that's not going to work, and I'll tell you a few reasons why that's not the way that things are going to go. One, if you move onto a public market, even AIM, it comes with more scrutiny and more accountability. Investors, sometimes wake up and they want to know a bit more about what the company's doing, how it's managing its facilities, and so on and so forth. So it brings greater scrutiny. And there have been some flirtations with this model on public markets. And they've been in the form of like REIT structures or, care service companies. And many of them haven't ended well at all. And particularly for investors and sadly for the users as well in some cases, where there's been financial scandals, governance scandals, and massive conflicts of interest that have been drawn to people's attention. So that's not a route that they're going to want to take. So what has to actually happen is whilst more money comes in, they have to, the way they realize their investments is they just get packaged on to the next private equity fund, an organization. It will buy it, fiddle around with it, re-engineer a few aspects of it, and sell it on and sell it on. And these are all very highly subjective valuations, and you can see that. And the thing with this model is you will see this model, and often it serves your users who are effectively just being traded and trafficked. You can see how it happens from a local authority through to a private equity entity. And the end care and safeguarding and the process that takes them through that is incredibly corrupt and murky. And that's what private assets investigation has been doing and looking at for a long period of time. So if you look at the rate grounds inquiry, this will be the underbelly of it. This is present. It's present in it. So those unfortunate, I'm trying to be as sensitive and respectful as I can, but those unfortunate girls who were let down so badly, you will see this model. And the organisations that were administering them were in this private equity model in just the way I described. You will also see it in immigration. As I explained to you earlier in the previous video, is immigration, people say break the gangs, break the, stop the boats, break the gangs. That's one side of it. The other side is this trading model when they come, where they get passed from a local authority through these private equity owned agencies that sit in these offshore funds. And a lot of money is made in the process. And what private assets investigation has done is it's mapped that. And you'll also see the deep complicity of the legal sector. And that will be from your solicitors who sit within local authorities, and to a certain degree some that sit without but feed effectively off the same system. I'm trying to make it simple here because I don't want to make the video too long. And then you will see the barristers. Now your local authorities are a big buyer of legal services. So the barristers that they employ, let's remember barristers are self-employed, so they have to, if they want the business, they have to play the game. Whatever sphere it is within this private asset space. And then you've got the judges, and the judges effectively are the gatekeepers of this process. And if you look at the judges will be the previous barristers, in some cases the previous solicitors, who all feasted off the same system. Now, if you imagine over a number of years that there's been an immense amount of data collected on this, and there's a number of people on this, and it's just me talking about it here. But this is a very broad investigation because you have to look at so many organisations to follow this flow of money, some of the tactics that are used when these people are trafficked are extremely distressing, and the output of this will initially be overseas, and there's a variety of reasons for that, there have been instances of quite astonishing racism that we've come across as well, and but it's not racism that you would hear somebody like Rupert Lowe talking about, or other people who have a different take on racism. It's kind of like a racism that when you see Britain sort of making allegations about China and their treatment of the Uyghurs, where they allege that their culture has been erased and they've been brainwashed and so on and so forth. It's that. So as you can imagine, this is a very, very sensitive area. And when you start making inquiries, people start waking up to what you're doing. So it's a weird situation where the veiled threats about my investigation have become, via different organisations, veiled threats about your investigations. So both ends of what I've discussed to you today. Now, it's nothing to really be concerned about. It's part of the course. And I've been working on things like that in my own time on a voluntary basis for over 25 years, so it's something that you do encounter quite a lot, and it's not something that's unusual. And I hope now you can see why I told you the secondary objective is super important, and I've given you now two angles of that. And this is where I'm spending now the vast majority of my time is my free time. This is on private assets, because we're readying this for output, and there's a lot of material, and it's going to be a complex and very, very difficult process. I hope you all have a nice Easter break, and I don't plan to really make many more videos now, because I have to focus on the private asset stuff, but I will come back if there's something relevant to talk about. Take care for now.